All right, so let's do a top down on gold. What is going on with your boy gold? All right, so first things first, let's look at the monthly. All right, what do we have? What do we have? What do we have? We have a bullish gold, right? Comes down, it breaks structure, internal liquidity. Okay, we're gonna do this very quick, very quick. So when these lows were taken right here, when these were taken, the break of structure. What closed the break of structure? This candle right here. This closed the break of structure. So at that point, we were looking at this high right here. So this low. Price continued to break structure, continued to take out lows. We took out another set of equal lows here, right? So then the leg became this low right here. So now our swing was from this low to this high, right? This high to this low, I meant. Now we made equal lows right here. You see this? Equal lows. So where is the money there on the downside? The money is down here. Okay. So we have already what? We've taken out these lows. Yes, we took out lows here. We took out lows everywhere. Okay. All of the internal liquidity lows were taken at this point here. Price was very much taking out the lows. Okay. Now from this point, we had a break of structure, didn't we? You see this high right here? From this high right here. I'm gonna have to make it small. All right, so now this is a break of structure right here, right here. Break of structure. All right, we're gonna change the color, make it black. We had a break of structure. All right, that was a break of structure. Then we make a low, higher low, right? Boom. Once this happened, this higher low, we were confirming a bullish retest, and we were off to the races. Boom, higher low comes down, fails to beat the low. What is it doing though? Generating equal highs. And as you can see, those equal highs were ran through on the next swing low. So we had these equal highs generated, and within the internal liquidity, we had equal lows that were taken. Okay, so boom, now we had equal highs, equal lows. This right here becomes a another important area. So now look, you see how we're moving with price right now? Retest is a fib entry, no problem, and gone. So we've been bullish on the monthly time frame. So as you can see, what was the next major break of structure? Right here. And this was the open um of 2020 June. Okay. When we hit this swing high, we had officially made all-time highs on gold. Okay. And we peaked. We peaked here. All right. So as of right now on the monthly time frame, our range is from this low to this high. Okay. And we just defined all of the breaks of structure off of the monthly time frame. So as of right now, liquidity is resting above this high, and we have internal liquidity resting where? Below these lows, right? So we can go ahead and put that there. What we're going to do here, we're just going to go ahead and make, I like to write this, I just write major swing high. Why is it major? Well, because price made an all-time high. Okay, so here, boom, major swing high right there. Boom. And this would be down here, your major swing low. Oh, don't you love how that works? So we have our major swing high and we have our major swing low. I'm going to change the color. Yeah, that's fine. Maybe leave it that way. All right. So look, this is our area of price. So what we need to do now is go on to the weekly. All right. The weekly time frame. As you can see, we had more views of more breaks of structure that we weren't pinpointing as much on the monthly, but you see right here these relative equal highs that were established. Actually, they were actual equal highs. This was a break of structure. So that was a break of structure, and then this leg on the weekly time frame became the significant leg that broke structure right here. All right, so we're just running through the price action right now. What kind of market are we in? We're in a bullish market on gold. It's bullish as of right now, what we're looking at. Okay, so now we hit this major swing high and we start falling. We start falling on the weekly. And as you could see on the weekly, we generated all sorts of liquidity internally and it was all taken, right? Look at that. That was taken. Look at these equal lows right here. I don't know if you're starting to see the pattern yet, but the liquidity rests between under and above equal lows and highs. So if you can identify that, you understand where the money is. Look at this. Okay, boom. So now we have right here, I'm going to change this to actual resting liquidity here that hasn't been taken. And as you can see on the weekly, we are pushing bullish, but we have not broken more structure than just this high right here. And when we go to the daily, we'll be able to identify this more. So as of right now, where is the target for gold off the weekly? Well, we would want to target this first, the weekly order block. See that? Weekly order block. That's our first line of business right here, because this hasn't been tapped. So this is where gold is going, okay? Gold is going to about 1820. Now, how far back can we retrace? Well, we're in consolidation right here on the weekly, and we've had really nice pushes above. So we had a pullback right here. Last week, we pulled down to the 1756 area of price, and we launched from there. So as of right now, I'm remaining bullish. Off of the daily time frame, I see a break of structure and a potential continuation to the upside to 1820. Let's go ahead and head to the daily. Okay, the daily. Now we're getting somewhere more deep. Look at all of the liquidity above here. I mean, when this thing starts moving, man, we're gonna have lots of liquidity. Look at this. I mean, there's liquidity there. There's liquidity right here. Look at these equal highs up here. I mean, man, there's just, you can't miss a beat with gold when you just know where it's going. And right, like I said before, our first line of business is the weekly order block. This is the high that we're seeking. Until gold doesn't beat this, we are still seeking bullish prices. This right here was a break of structure. Look at these. You see these equal highs? We ran them, and what happened? This leg right here, up to this leg up here, what is our range on the daily? Now, something I want to bring to your attention is you see this candle today, this daily candle today actually took out. When we go to a higher, lower time frames, you're going to see that we actually took out the high, which is great. So now we need to see what happens next. But as you can see right here, we already took out the lows as well. So in a sense, we might be resetting ourselves into a new dealing range where we can see price continue to move along to the upside. All right, this consolidation has taken out the low right here. Right here, low has been taken out. And I'm going to go ahead and make it a little more easier for you to see. I'm going to mark this too, because this leg right here, when it pulled back, this pullback from here to here actually broke structure. This was the break of structure. I'm going to go ahead and mark that as a break of structure. And we're going to change, let me put this up here. Let's put it on the top, center, boom. So this right here, we want to have as a break of structure. Let's move that. It was a break of structure right there, boom. Right through. And when we hit our swing high, our swing low, you see what our swing low did right here? All right, from this swing low to this swing high, we broke structure. We pull down into the swing low and we take out internal liquidity. And what happens next? Price comes to 50% of this imbalance. You see from this wick to this wick, there's a volume of price. That's sell side inefficiency. So we need to fill that, and that's what price did. And if you don't believe me, just go ahead and take your Fibonacci or your Gam box, whatever, and look at that. It just comes shy of 50%. Good enough. Okay, good enough. All right. So this is the daily. Now let's zoom into the 4-hour time frame, guys and ladies. Here's what we got now. So we see a. We can go ahead and make this a little bit smaller for now, because now check this out. I think I have already marked it around here. Okay, so this is no, not that, not that. Um, so this is the low, the significant swing low right here that we are dealing with in this consolidation. So I've actually marked this price level. This is a bullish order block. We've already came down, and like I said, we already took liquidity on this wick. We didn't come to this order block. We came just to the inefficiency, the imbalance, and we came back. Our next swing high, our next swing low was right here. Okay, and our swing high right here does what? Generates equal highs. Let me find that. I know I have put it in there somewhere. There it is. Okay, look. So you see this right here? Let's zoom in very close. This high right here just took out buy side. So we are clear. We are clear now. Our dealing range is now reset. So now we can say that this swing low right here to this swing high took out price. But I'm going to mark this leg right here. From here to here, because this level right here, like if I mark this swing low, this is a turtle soup long. What is this turtle soup long? Is when price gives a liquidity purge to take money that's been left in the market. There's orders down here that haven't been mitigated. So when I say they, I'm talking about the big money in the markets, the banks, the hedgers, all the smart money people or whatnot. They're the ones that came down here and filled this inefficiency. Retail doesn't move the market. It was not buyers and sellers. It's actually the higher people who are throwing the big lots, millions of dollar lots. Anyways, I chose this leg here because this is actually a swing low. You can see the candles, and we're within the price range of all the wicks touching on this price level right here. Okay, another thing that I like to utilize is the banking levels. If you don't know what banking levels are, think zeros, twos, fives, eights. Okay, I'm gonna put some on here. Let me see. I guess I said some. I put all of them literally. Let's take some of those off. Okay, we'll keep that one. Keep that one. Keep that one. All right, let's get rid of those. We'll keep that one too. We don't need 1820 because that's where our weekly order block is, so we don't need to worry about that. But as you can see, our weekly order block went to a banking level. So here's the banking levels that we are currently trading off of. And as you can see, we are trading between about 1764. It's not a banking level, but this isn't a significant level. If I were to choose a banking level, I'd say about 17.5 up to 1800. But if I just ran a fib from this swing low to this swing high, you can see that this wick right here that came down today is literally a big discount for the buy. The reason why I faded this only for a scalp, but the reason why I didn't hold this is because we don't know what price is going to do in this consolidation. Further go down and gather more liquidity. There is more liquidity down here, is there not? You know, so we need to watch that. Now that I'm on the 4-hour, I see everything very clear. So what we need to see right now is if this low is going to be respected. So what I'm going to do now is I'm going to mark the 50% of this range right here. And I'm going to go ahead and just go to the banking level, not to the swing high. And if you see, the 50% is right here. Here's the 50% of that range. There it is, 50%. I'm going to mark it EQ, 50%. EQ means equilibrium. 50% All right. And I'm going to make this that color, and we want to put it to the bottom and just to the right. Okay. All right. So this is what we're looking at on the 4-hour time frame. Where is our break of structure, guys? Well, you got it right here. Boom. Here's another break of structure. It's very, very important to identify these breaks of structure. This is what tells you how to react to price. If you were on the charts, okay, and you saw this high being broke and you saw that these are equal highs, you can anticipate a short. You can. It seems like hindsight. And believe me, sometimes hindsight is what it takes for you to understand what you need to be seeing and doing. But this is off the 4-hour time frame. When we get lower, you're going to see now how much clearer it's become. This break of structure right here is a big deal. Okay, look at that. Break structure pulls down what? Into an imbalance. You see from this wick to here, there's no wick here at all, but this is a fair value gap. Okay, we're still, this is a bullish push up. Price pulls down into here, and this was a distribution, accumulation, takes out the highs. That was the whole point of that move right there. And this is your classic retail M pattern, is it not? Don't we trade M's? There's your classic retail M pattern right there. You can't get any better than that. Boom. Makes a higher high, takes out the highs, boom. Gone. Takes out the internal liquidity, external liquidity, and internal liquidity. We're good. So now you see it's closing this hour right now as a swing low. So what we want to see is these this area of price respected. Okay, we want to see this. We want to see this low respected if we're going to continue to the upside. And once again, what are your targets? Well, our targets are now going to be these highs, of course, 1800 level. We're going to get there. And we want to get ultimately to the 1820. So I'm on the lookout for buys on gold. We had great bullish push yesterday. Great, great. You know, we had a nice push pullback, take out the highs. Nice 23 point sell here today. Okay. And we've gotten to a point of interest. Now, I did mark on the 4-hour a order block that I thought was significant right down. Hmm. It's fine. I don't have it here right now, but it's off the 4-hour. Nevertheless, this is the price structure that we need to be focusing on right now. This is the break of structure, break of structure. Our whole new dealing range is going to be here. If price closes as such, right now on the hour, if price closes this hour with a with a higher low, our dealing range is going to be from this high to low on the 1 hour. Okay, this is it. It would have still been this had this not taken out this high. But now we're looking at this. We're looking at everything in here, and we're going to see if this low is respected. And you know, we'll take gold from there. And as you go down to the more intraday entry level time frames, you'll see how price is reacting. But I don't advocate hanging out on these time frames too long, okay? Because you get caught up in all of this. You know, there's a lot of noise here, and this is just a big consolidation. Okay, so when you're in consolidation, it's better to just play premium to discount, discount to premium. Okay, right now we're in a discount, so buys are in order, but you have to look at time of day. It right now it's 1:50 in the afternoon Eastern time, New York time. You know, I don't advocate taking a trade right now. Wait till at least Asian session around there. Gold moves around 8 9 o'clock. You start seeing some moves setting up London session for the next day. And what you'll find is whatever happens in London, if it's going to be a bullish day, you'll see a continuation at 8 a.m. You'll see a big impulse move for continuation, and that's what I'm waiting for tomorrow. I'm waiting to see tomorrow, Cinco de Mayo. I want to see price come back into this level, retest, and push up to take out further highs. And this will be like a big, 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 big move because we're talking a move all the way to 1820. And when you're on these time frames, you can control like this right here is a big stop, 9 points. you might be able to get yourself a 2.5 point stop and catch a big move like this. Now, I'm not saying just go and buy just because I said so. I'm saying that it's likely to buy. It's likely to buy. Remember, we have news this week. We have a lot of news. Tomorrow, there's some USD news. Okay. You're going to see some crude oil stuff. You're trading CAD and whatnot. Thursday, big news. Lots of news for the pound dollar. Obviously, it's NFP week. So just be aware that prices are going to be used as a catalyst to get smart money's agenda done. So when you're looking through this video, if it seems like a lot, just remember the most important thing that I said is understand where the breaks of structure are. You have to see that. You have to see where the breaks of structure are. If you aren't able to see price action, then it doesn't matter if you trade smart money, it doesn't matter if you trade retail, it doesn't matter what you do. You need to see this was a significant break of structure. These were equal highs. Equal highs equals money. Money. Just think about it like that. Equal highs, money. Where's the money at? They're resting above your double tops and your double bottoms. And they're taking all that. Look at that. They're taking all that. All that. Boom. And you see how it has to be a body that closes below these wicks, okay? Now, when it does this to take out the high, a wick is fine. This is a key level. Internal liquidity and whatnot, you want to see bodies like this right here. This is a break of structure. But when it pulls back, you can get an entry. And as you can see, there is a bearish order block, and there was an easy sell there. Look over here. Look at these equal lows. They do this. This is like clockwork for these guys and ladies. All right, boom. Comes up, makes equal highs right here, right? Look at that, equal highs. Comes down, takes out those lows, boom, runs it. Takes all the money, man. All the money. This break of structure is all you needed. Lower high off a bearish order block, sell. Gone. Now what do we have? A huge inefficiency in price. Look at this huge. Let me change the color for you. Look at this huge inefficiency in price. This is called a fair value gap. There is volume of price that has not been filled by any sort of wick or body close. So this is where I could see price. Now, you might say, hey, well, why isn't it bearish? Hey, it can be. I'm just bullish on gold for all the things that I said in this video. But it doesn't mean you can't take a short in here. If you see that price is failing to beat the high, well, it goes without saying you can sell it down. And where would you be? Where would your target be? Let's say price comes into here and you got your stop right here, right? Let's say you're a little bit more of a no. You say your stop, you have your stop right here. I'm gonna be just very tight stop here. Your targets would be the lows. Why? Look at the equal lows here. There's money below here. There's money below all that. So I would be targeting the 1764 level, and this could be in the cards. 23-point move, but this already happened right here. They took out the dealing range. This whole thing right here was a market maker sell model. It was just a manipulation, accumulation, smart money reversal, distribution right here. So distribution pulls down, gives a little pullback, and distributes further, takes out the low, resets the entire dealing range to such price right here. Right here, this was the new dealing range. As you can see, we accumulated, manipulated, boom, gone. Takes out this high. This range becomes insignificant. And now our price leg was from this high to this high. And you could just follow price and see how they've been breaking structure. Very, very clean, okay, in the consolidation. So just follow price, okay? That's all I've been talking about lately is follow price, understand what's going on with what you're trading, okay? And just keep marking. I'm not saying your charts have to be all crazy like this, okay? But I will tell you that if you go through it like this, like what I'm doing right now, you're gonna find that um, it's very, very easy to trade because you're kind of taking notes as things are happening. See, look at that, boom. So that's it for gold. I hope you had a good time watching this video. If you have any questions, reach out to me. And yeah, happy trading this week.